Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, April 12th, 2018. This will be the first of possibly two videos on the shipping stocks. Yesterday in the trading room, late yesterday I had a request from member Drum and Drive who'd mentioned that the shipping stocks are starting to move. I hadn't noticed that they'd fallen off my radar. Just a quick background on the shipping stocks. Over the years, going back many years now, I've traded this sector on and off, engaged it very aggressively at the time, mostly on the long side. And I wanted to say that there are fewer sectors up until recently, up until a couple of years ago when I started trading the cannabis stocks. I can tell you that this sector, bar none, was the most volatile. I know of no other sector that could produce such quick gains in such short order is a lot of these, not all of these. I'm talking general terms, but there's a lot of the shipping stocks in here, and I'm talking high double digits to sometimes triple digit gains in just weeks, sometimes days, weeks, or usually not any more than months. So I wanted to say that it's a trade where the momentum traders come in and then they leave, and you get in, you get these trends, you get out. The moves are very big. Here, I'll just give you an example here from that rip down there to the top. That was 161% run right here in GOOG, and you can see they trade well to the technicals. But I've stayed away from a while from the shippers for a while. Like any other sector, when it starts to do this, go into a sideways trading range, the charts aren't clear. You can see a sideways trading range here that went on for since last summer, last summer pretty much. Then you stay away from them. You like to get these rips and dips, explosive moves. Here's a big symmetrical triangle back here in 2016, breakout, came in, hit this line, and then rallied. So here we are. Drum and Drive was correct. I'm seeing there is some movement lately, and there's a lot of charts that look compelling. Now, it's part one of two because I have two different watch lists. There's so many shippers that I've traded over the years that I've actually compiled two separate watch lists, and I've only had time this morning to go through the first one, and I've flagged some of my favorites. I'll go over those right now in this video quickly. You can pause the video if you want to look at the levels. If you have any questions, drop me a line in the trading room. And then I also want to take a look. I like to confirm any long entry or short entry for that matter on the shipping sector with the charts of the BDI, the Baltic Dry Index, and the HARPEX. Those are two shipping indices, and make sure that that confirms, in this case, a bullish, trade on the shippers. So, in the final note that I would add to this trade is, in the past there has never been a shipping sector ETF. If there's one out there now and you've heard of it, great. But so my approach has always been because these are very volatile names. A lot of these are explosive in nature or implosive. So you can't trade them with a 2-3% stop. You're just going to get stopped out. You're shooting for usually double digit gains on these things, high double digits. So you need to give it a 10+% stop in most cases because of the volatile nature of these stocks. All right, so I talked enough on that. That's 3 minutes talking about the sector, the nature of these stocks. If it is not your cup of tea, stop the video here and just wait for the next, ETF or more diversified, more conservative trade setup. With that being said, let's dive into the charts. This is GOOGL, Golden Ocean Group. You can see the names down here. You can see nice support right here. I should have that level up for you. It's about $7. So about right at about $7. You have a reaction here. And the stock has tagged that level. It already has moved up to the first target, 789, in just short order. And again, thank you, Drum and Drive, for pointing this out. Had I seen these before, there were some setups, but there are still some setups. Otherwise, I wouldn't do the video if I believe I missed the boat. No pun intended. 11% or so already off that low there. At resistance now, you can see that resistance line. A lot of reactions from above. But if that gets taken out, there's your next target. If the momentum, and again, I can't say this enough, the momentum traders love this sector. When they engage it, and you'll know it, everything starts popping. It's like popcorn when these setups start going off one after another. Other positive. And then I'll move on a little quicker with the rest. We were oversold at that level. We have a pending bullish PPO crossover, low level PPO crossover. Here we had that, but we had divergent. We had a divergent low, so we did have the second one took. Same with the RSI divergence. You had a oversold, but you can see it was a divergent low, and that sparked that big rally that followed from there. You can see so big potential in a lot of these stocks. Sometimes you get a divergent low for the setup. Sometimes it's just a bullish crossover or an oversold reading. So maybe some potential there. All right, STNG, Scorpio Tankers. This one has exploded, as you can see. There's a beautiful falling wedge. I wish I had seen this stock just a few days earlier. Look at this, positive divergence, bullish divergence right there, clean bullish divergence on the RSI, the PPO, a well-defined downtrend line, and then boom, since the breakout, had I had a price alert, that one's already jumped as high as about 18% in just what, 2 days? So, a lot of movement on these, and just so you know, and I wouldn't chase it here because my first target on this one would be 249, right around there. If the momentum continues in the sector, next target up here is about 302. So Drum and Drive or whoever's in these, that's where I'd be looking at. So scenario like this. Oh, and I also want to say when the momentum really gets going, sometimes they just blast right on through a resistance level with hardly a reaction and just keep going. But I don't want to get too excited yet because we're just seeing some of these start to break out. The setups are certainly there. Here's TNK, TK Tankers. Nice. Look at this strong divergence. Look how powerful this bullish divergence is down here on the PPO and RSI against prices making a lower low. Downtrend line, had a little false breakout here that proved to be a whipsaw signal, but you can see there's the targets. Low price stock. Be careful with these low price stocks. Again, my preference is I use a shotgun approach. I'll take a dozen or more, 10 at least, 8, 10 at minimum of my favorite names and sprinkle small amounts into these. These are $1 stocks. That means they're just flirting with a delisting. If they drop below a dollar for too long, most companies will be delisted. Any stock trading at a dollar has, obviously, they're in a precarious fundamental position or they wouldn't be down there. A lot of these shippers that's the story with them. But the risk and reward go hand in hand. You risk a lot on the downside. That's why you don't put a lot more in than you're willing to lose. But on the upside, if my first target's hit, if this breaks out, that's about a 10% gain. Second target is about a 20% gain from current levels, and there could be more than that. If the sector gets some traction, I'll continue to do updates and add additional price targets on these. Next one up, FRO Frontline. We had bullish divergence here. That led to a rally of, I have to move over here so I don't grab the trend line. That was a 30% rally from here. We had a divergent low right here. So far from those lows, we've rallied about 25%. PPO's in bullish territory, and my next target here is 489. DHT, this one has yet to break out. I'm not crazy about this downtrend line. It's not super well defined, but you can see it is working its way down within this falling price channel. It did have a divergent low right here. At this low, you had positive divergence in place, and if it breaks that out, if it breaks out of that downtrend line, I'd have to add some levels. First being here right around a little under $4, but I think there's more potential there. Not one of my favorites, but again, I'm pointing out some of the ones that stood out to me. Salt, SALT, Scorpio Bulkers, support right here. It's been dancing on this support level now since last summer, and we have a downtrend line. Even within that trading range that it's been in for, the last almost year, you have these downtrend lines and they lead to these quick pops that take it up to the top of the trading range. So at minimum, that's my target right there. The top of the trading range, if it gets back up there around 840, 16% gain, not bad. So your stop on the downside, if it takes out the recent lows, 6% or so stop. It's not the best RR, but if it can take out the top of the range, it's been in a trading range for a while. Trading ranges never last forever. That's one thing we know. It's either going to pop up above or below this trading range. If it takes it out, then it'll probably make a run at, possibly take out those previous highs. KEX, Kirby Corp. There's a long-term downtrend line. It even goes off to the left of the chart. We're well above that. I'm not crazy about it. It's got a divergent high, but it's not confirmed. It's certainly in an uptrend, and it's breaking out to a new 52-week high. So Some people like to take these breakouts to new highs or new 52-week highs. And if you do, like I said, I wouldn't, only because of the potential divergence in place. But if you do, just trail a stop up and you should be fine. Don't let your losses get out of hand. It has a very steep uptrend line there. You want to watch as well. A break of that uptrend line might trigger a correction. And then we might be able to, recycle back into this one on a pullback. GMLP, Golar LNG Partners, nice, well-defined steep downtrend line of breakout. We didn't have divergence. This one I could see the possibility, and this may happen with the shippers as well. Sometimes they look like they're getting off to a start, but they need one more thrust down. So here's a possibility. If we got that, it would put in a divergent low, and we'd hit. I had a support level here, but I'd have to look at the chart. I don't see a lot right here. This goes back 2 years. I might have to go back a little farther. But if this one can keep going, you can see that's where my first target is, about $19. Next one up, EGLE, that's Eagle Bulk Shipping. What stands out to me is just this big, fat, sideways trading range that sooner or later is likely to break one way or the other. And again, as I like to say, birds of a feather flock together. So should the shipping sector get some traction? Should I be able to confirm, a bullish case via the BDI, the Baltic Dry Index, HARPEX? Looks like these shippers may go. Then this one could break to the upside. Otherwise, we're still within a trading range. So right now to take it, you wouldn't make sense. You just might get caught in more of this sideways grind. GLOG Gas Log Limited. There's a wedge type pattern. Looks like an attempt to break out today, but not impulsive so far. Even yesterday, it failed. It broke out intraday, fell back below. Today, it's broken out, but it's not very impulsive. Um, we could fall back in the wedge, have another test of this support. Support right here is at 1588. However, there is positive divergence, so this one could go if it can start to get some traction. And again, it'll depend largely on the sector. If the rest of the shippers start to run, is about another 6%, almost 7% upside to that first target there. And if that happens to get taken out, next target would be right around $20. TNP, uh, Tascos in Energy Navigation, Seikos, I should say, Seikos Energy Navigation. Let's see here. We've got this little support level here, and that broke, and that was powerful. You had a big sharp move. You can see that there, and it's really been working its way down within this downtrend line. So not one of my favorite, but if it can take out this downtrend line, it looks like it'll probably come back and challenge that level there, at least the bottom of that level. I had the trend line, which it broke support on, but there's also a reaction high right there. So say anywhere from about 380 to 385. That would be my first target right there on that one if it took it out. And it doesn't sound like much. It's $3.65 or 56 cents right now, but you're still talking 7 to 8% or so. SFL, ship finance, another wedge type pattern looks similar to one we just looked at. And positive divergence down here on the RSI. Support right there around 1394. You can see the support. And again, if things really got going, it might work its way all the way up here to about 16 or so. A few more to cover on this list. TOO. Here's another one stuck in this, multi-month, almost year-long sideways trading range. We had one false break above it not too long ago. Proved to be a whipsaw signal. One thing you have to do too, when taking breakouts of, whether it's this one in particular, any of these, you want to see broad participation in the sector. If just one of these stocks break out and the rest are not breaking out, they're still in downtrends, there's no buy signals, ignore that because it's probably going to prove to be a whipsaw signal. But as I said, birds of a feather flock together. That's especially true in this sector. Once the momentum traders get in there, everything starts popping one after another. I'll be watching for that in the coming days to weeks. So first target, if it takes out the top of the trading range, is 313. Again, top of the range is around 275, so that would be about a 13 or so percent pop if we got it. And then it gets pretty thin above that. If it can take out that 313-ish level, there's a lot of pretty thin air all the way up here to about 481. So you're talking potentially, again, not to get too excited at this point, but potentially, 73% gain. NAT, NAT, Nordic American Tankers, nice bullish falling wedge. Here's one that hasn't taken off yet. So you can see the downtrend line, the divergence, strong, powerful, positive divergence on the lows. Um, about the strongest divergences. This wasn't really that strong, and it still led to a little bit of a pop. So did this one, but this divergent low is clean. And I haven't added any targets yet to this, but I can tell you there's some resistance there around 230. Then you have some more right up here around those highs. There's actually called that a resistance zone from 230 to 245. We need to do that. Then you have these recent highs, then a big old gap to backfill. So if this one, and again, if the sector goes, and I know this stock, it can do it. It has the potential to do it, to backfill that gap. And from where we're at now, you're talking about a gain of 73 or so percent. SEA, Guggenheim Shipping ETF. So I stand corrected. Yes, I must have charted this one in the past. I think what it was is I didn't care for the components of this ETF. Um, but either way, there it is. If you want to trade the ETF, I much prefer picking the individual stocks because I've in the past I've done a better job of trading the individual stocks versus the shipping ETF. I think I was getting it confused with the airlines. The airlines used to have an ETF. Trying to recall that symbol. Um, Either way, they stopped that one a few years back, and that's the one I was probably getting confused with. They're both transportation sector. All right, so there's SEA, and you can see this one has broken out. Now, that's a positive sign. That's not a super well-defined trend line. I need to say that. I draw this trend line. Trend lines are subjective. The more reactions to me, the better. I didn't have a lot of reactions on this trend line, so I'm not, super crazy about that breakout. But what I do like about it is the fact that it did come, at least the stock has reversed after a divergent low. You can see the bullish divergence down here. First we've had in a while. Clean, positive divergence prices making a lower low, and that also came right around support. You can see here, going back the last couple years, this is where the shipping index, or at least this ETF, has stopped. So to me, in trading, it doesn't get much better than this. Oversold at support with bullish divergence. That's what I look for in a trade setup. So again, I wish I would have seen it earlier, but there may be some more upside left on these. So again, thanks for pointing that out in the trading room. All right, there's another target up there. This is an older line. I probably would move that up there and call that a target zone now from about 1105 up to about 1115, we'll call it, if you prefer the ETF. And again, the benefit of an ETF is diversity, safety in numbers. They diversify among many different names. Most likely, they're not going with those small, very, very low price speculative names. And so you then avoid if any one company has a big gap down against your position, it'll be mitigated if you own an ETF because that'll be one of, I don't know how many they have. ETFs usually have anywhere from 15 to 30 or more different stocks within there, but they all vary. You can just do a quick Google search on this one and they'll give you a list of their holdings. TGP, TK LNG Partners. So obviously this is, transporting natural gas. I pointed this out because it's at support. It has a pretty decent support level here that it just hit a support zone, the top of that support zone. Bullish divergence. I don't have it drawn out here, but you can see it does have divergence here in place, like a lot of these stocks. Again, I've gone through many, and I only flagged the ones that stood out to me on this first of two watch lists that I have. So there's the pattern there. Maybe another thrust down. So you can either buy it on a breakout. First target's 1935. Beyond that, probably take a run at the previous highs. You can see this was a trade in the past. Must have been pretty big gains here because I had the first target here. Second target there was hit, and that's where it stopped. Fell shy of that third target so far. SSW, bullish divergence, divergent low at support as well. You can see the reactions there. The stock has had a couple reactions around this level in the past. It's capped all the declines back here. We undercut it slightly, and I actually like that. I like to see support levels briefly undercut and then a reversal. That's what we call a bear trap. The shorts pile in. They say, okay, support's broken. They're going to short it. And look at the volume. I don't know if you can make it out on the YouTube video. There's huge green volume bars after that. So that was a fake out. Anybody that shorted got roasted. They turned around and ramped it up. The shorts had to cover. They got squeezed out. And as of now, fast forward to today, so far that was bullish price action. There is resistance right here around 685 or so, and that's where the stock has stopped. You can see all of it right here. Go to the left of the chart. A lot of reactions on this line. So if it can take out the recent highs with conviction, pops right up to 774, and that's from where it's at now, you're talking about a 13 or so percent gains. And then after that, that is really the top of this, this larger trading range here. So it'd be even more bullish to see a breakout above that 775-ish level. This is just some old lines that I had, but that could be a big potential big basing pattern with longer term, swing trend trading implications or opportunities there. Last one in this list, NMM, Nancy Mary Mary, Navios Maritime Partners LP. Um, Not crazy about this one. There's support there. It's not a super well-defined support, but I do see a bullish crossover. The PPO is attempting to curl up, and it's also coming off oversold levels. So again, I tried to point out the ones that I really liked and the ones that I sort of like. A stock like this, if you see a sharp downtrend line, then you go down to the 60-minute chart and see if you can confirm an entry. That's what I do on these. So you draw a downtrend line. So far, attempted to break out. It did. It broke out and back tested. So I can tell you this. It's if you want to add this as a portfolio of what I call a shotgun trade, with scattering, several positions among the sector. Here's one you can take. You had bullish divergence on the 60 minute. I wasn't crazy about the daily chart, but again, you never know which ones of these are going to pop and really run. So from pure objective point of view, this is an objective entry because you're buying it on a back test after a breakout, and you had bullish divergence. You can set your stop somewhat below the recent lows. You can even have a more aggressive stop if you want. And the target on this one at minimum probably going to come up here at about 192. So you're talking a run of about 13% or so. Again, minimum, that would be my first target. So you could allow yourself a 4% or so drop, and that would take you right around to the recent lows, and that would be, roughly a 3-to-1 RR. That's what I like to, at minimum, I like to use a 3-to-1 RR risk reward ratio on a trade, meaning I'll risk $1 of loss for every $3 of a profit potential that I'm shooting for. All right, we'll wrap it up here, and I will go through my other list as well as the BDI and the Harpex, and let you know if I think that there is, longer term swing trading potential, or if this is just a quick, you know, sometimes these things start to look like they're going and a few of them break out and the rest don't, and then the sector continues down. So I'll share my thoughts later. All right, this has been Randy Finney with Right Side of the Chart. Best of luck if you take these.